Hello and welcome to our second special US election update. We finally have a result. Joe Biden will become the 46th US president in January 2021, and the Senate will likely stay in Republican control. Mr. Biden has a profoundly different ambition for the US role in the world. He is expected to embrace multilateralism, take the US back into the Paris Agreement on climate change, and global trade should improve with some easing in relations with China. In other words, Joe Biden is good for the global business climate. What's less good for the US economy is a divided Congress. It makes tax hikes and more regulation less likely, but it does cut the chances of a consensus over a really ambitious stimulus deal to safeguard the economic recovery. Less fiscal support will add lots of pressure on the Federal Reserve to pick up the slack. That means interest rates will have to stay lower for even longer, and the Fed won't be able to raise them for at least another 3 or more years. This translates to slower growth in the US, and as everywhere else, an outlook clouded by the pandemic. This said, we're still cautiously optimistic because American incomes continue to rise slowly, there are still relatively high levels of household savings, and house prices are still recovering. And of course, there is the promise of a COVID vaccine, which would finally help us to contain the pandemic. So how are we positioning portfolios for this new chapter in the US and the world? Well, let's ask Stéphane.
As Sami said, a unified government, where the president's party controls both houses of Congress, will be able to pass a significant economic stimulus deal. Without that support, Joe Biden can only provide a weaker boost to the economy. And this is key for markets. With this in mind, we have adjusted our fixed income exposure by first selling US high-yield credit. This is because less fiscal support through Congress means that highly indebted American companies are more likely to default. We have used this cash to buy emerging market debt in local currency, which we think will benefit from better international trade conditions and a weaker dollar. Keep in mind that the US elections are not over yet, as the race for the Senate will not be complete until January. We see 2 scenarios. First, a stalemate in Congress where the Republicans keep their majority and make Biden's administration job harder. This is the most likely scenario. Secondly, there is a small chance that the Democrats take enough seats to give them control of the Senate. But Mr. Trump is contesting the result in the courts. Investors may have to live with volatility for many weeks and even until the new president takes office on the 20th of January 2021. In the meantime, we are working to keep our clients' portfolios well positioned through this period. Thank you very much for watching.